Morning, Steve Freed in Chicago with the morning grain comments. So we've got grain prices higher overnight. I think, first of all, the market is hearing that China may begin buying July and August U.S. soybeans. This is a time frame in which normally Brazil offers China beans, but looking at the comparison in prices on a FOB basis, July and August U.S. beans are bid at 45 over, whereas in Brazil, July is 80 over and August is 130 over. So I think that any new business from China probably brings our carryout down even more and makes the balance sheet even tighter. Could we say the same thing about corn? U.S. prices are competitive to most regions, including China. There is a debate on the fact that China's corn crop could be smaller than the USDA's number, and their demand for imports may be higher. We do note that Argentina government is talking with various ag associations domestically about trying to suspend the export suspension, trying to figure out a way to keep domestic stocks at a acceptable level by but at the same time allowing more exports. I still think next week USDA should lower the U.S. corn and soybean carryout, raise exports, and that could push us back over contract highs in both nearby corn and soybeans. We noted that Dalian soybean meal, and rapeseed oil, canola oil, contracts made all new contract highs overnight, and the canola Canadian futures is also making new contract highs. As far as the weather is concerned, it looks to us that, again, 65% of Brazil will see normal rainfall over the next 30 days. Southern areas and maybe northeast areas may be drier than normal. In Argentina, two things. Number one, there could be a good rain event in Argentina the January 12th through 14th. The American model is wetter than the European model, so that'll be very important to see what the actual rainfall is. But after that, 40 to 45% of Argentina could see normal rains over the next 30 days. Argentina lowered their corn and soybean crop ratings. They also lowered their soil moisture adequate level. Argentina soybean blooming is behind normal, and pollination is also behind normal. And so there's concern there that a lower Argentina crop could reduce their corn exports down the road and also reduce their meal and oil exports. Also, as far as wheat is concerned, U.S. wheat prices are becoming more competitive to buyers. North African buyers are looking to Black Sea for some. It still looks like the Baltic price is cheaper in the world, but we are competitive versus Europe and the Black Sea. And the key is Russian exports and also European exports. USDA has Russia taking 40 million tons, and the pace in Europe is above the 26 million tons that they're talking about in Europe. So a big week next week with the USDA, and we'll be watching weather. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.